All right. Stocks versus real estate. Which is a better asset? Across all my latest videos, the importance of acquiring some income-producing assets to build your unearned income has been explained enough. All right, so now the golden question that's left unanswered is which asset class will be the best income-producing asset? Your mind might be wondering right now whether paper assets like stocks, bonds, mutual funds will outperform real estate. So let's take a look at different asset classes by comparing them from different angles. My name is Sanan Sanani, and a few years ago, after having lost all my savings from bad financial decisions, I spent a lot of time with my millionaire mentors, and they taught me a couple of real estate strategies that almost nobody out there is doing. And I traveled to Eastern Europe in between the Caucasus Mountains and started investing in an emerging market. The country is called Georgia, and I'm investing in the capital, Tbilisi. So my mentor taught me how to leverage my main income to create a side income, all right, in real estate that I grew and looked after and eventually became my main income. And I have been showing others the exact step-by-step way on how you can do the same in any market situation at any time and anywhere in the world, no matter if the market is booming, no matter if the market's falling or flat. And I'll talk a bit more about that in a little at the end of the video, because right now I'm going to answer the big question that's always been on everyone's minds. Stocks versus real estate. If they fight, which is a better asset? Well, let's look at it from a couple angles. The use of leverage. Banks love to lend money on properties. They lend up to 80 to 100% of the property's value. On the other hand, we have paper assets. Well, not all paper assets are allowed for margin borrowing, and the available leverage for those that are allowed is anywhere from 30 to 60% of the value of the stock, depending on the market you're in. Also, now with online platforms evolving, they're becoming more and more aggressive. All right, the available margin on selected paper assets has reached above 90%, leading beginners to suffer catastrophic losses. All right, when we But when we consider which asset you can get a loan easier, real estate is definitely the winner. The fact that all banks compete with each other in providing the best interest rates and financing costs for property loans to attract real estate investors, it tells us something about properties. It's a very safe investment. Next angle we want to look at is capital gains or losses. If the market goes up, both assets will be winners. But one big difference between paper assets and real estate is in the case of paper assets on margin. All right, when you're playing with margin, when they go down in value, the financial institution lending you the money in the trading platform will make a margin call. All right, a margin call, which is forcing you to top up your capital to pay a portion of the plummeted value in a way to go back to the agreed leverage. If you, the investor, can't top up your invested capital, all your investment will be lost. To manage such disastrous risks, the investor in paper assets ends up putting almost the entire purchase price in cash. All right, before opening up a margin account to trade paper assets or securities, you should keep the following in mind. 1, you can lose all your money and even more money than you have invested. 2, you may have to deposit more cash in your account on short notice to cover the market losses and avoid margin calls, aka losing your entire invested amount. 3, you may be forced to sell some or all of your securities when falling prices reduce the value of your securities. And 4, your brokerage firm may sell some or all of your securities without even notifying you to pay off the loan it made to you. All right, now let's have a look at real estate on the other hand. In the event that the value of the rental property goes down, the bank will not make a margin call. Okay, you will not be forced to add more funds to avoid losing it all. And you're not forced to sell the property to satisfy the loan either. Let's go look at it from a different angle. Cash flow. You might be wondering why anyone would hold on to a rental property that has lost its price. The answer is cash flow, because it's still receiving every month some money. The main reason investors buy a rental property is because of its constant and reliable cash flow. You can always count on it. All right, all this hunting and carefully selecting properties and throwing offers, we as investors, we're doing this all for cash flow. We look for properties that generate a positive cash flow. Positive cash flow means the income should be more than the property expenses, including your mortgage payments. And a real estate investor should always be a wise investor. And a wise investor only buys rental properties on the basis of their cash flow, the money coming in every month, not in the promise of a future capital gain. The price is going to rise one day. No, that's not why we invest. That's a cherry on top. For a wise investor, capital gain is an added advantage that can be very rewarding if it comes. But if it doesn't, that's not what we're here for. We're here for the cash flow. Now, why would anyone sell a property that is producing unearned income to its owner? When I look for properties, I only buy rental properties on the basis of their cash flow, right? Not on the promise of future capital gain. Capital gains on the property is an added advantage that can be really rewarding, but my decisions are never made on the basis of future capital gains. Markets can go up, down, or sideways. There is always cycles. If the rental property generates positive cash flow, I can weather any storm and survive the downside in the market until things become okay again and property prices pick up. You can't say the same about stocks. There is no cash flow. You're either going to panic and sell. You're either going to panic and sell or hold and wait for only God knows how long. Next angle we want to look at is control. When you buy $100,000 worth of equity stocks or even dividend paying stocks, you don't have any control over how much you buy each share, or the amount of dividend, or whether the dividends will be paid and when the dividends will be paid, or on the future value of the stock. All right, at best you can pray, maybe send the company an email, wish them luck, a little bit of praying and a little bit of anxiety. It doesn't take much convincing here to have you agree with me that the investor will have no control at all over the current and future prices of stocks and other paper assets. But when you buy $100,000 worth of rental property, you could have paid way more or way less of what it's worth, all right, depending on how well you negotiate with the seller and how bad the seller wants to sell it. So my golden rule, and most successful real estate investors I've studied also have this golden rule, where we only manage to buy properties at a 20% discount. Below the market value, not 5%, not 10%, not 15%, 20% discount, right? One, we know how to negotiate. Two, we know how to look for motivated sellers who want to get rid of their property for personal and family reasons. Real estate investors will always buy properties with money borrowed from banks or financial institutions, all right? Even if I have the money, I'm not gonna use all the money. There are two types of real estate investors, and it's important not to get confused between the two. There are those who make money elsewhere and hold their wealth in properties. They usually pay full cash. They don't want to get a loan. They say, oh, I don't want to be tied to the bank. And then there are those who make their money from properties and they buy properties with money borrowed from banks, so you can have a high cash on cash return. Now, these lending institutions will always ask you for an appraisal of the property. Either it's done by them or they ask you to get it done by a certified appraiser. Now, this, in fact, acts as a protection for you not to overpay for a property, since the bank will not lend you money for something overpriced. Okay? So the bank will happily lend you money for the appraised value of the property, which will act to your advantage when you buy a property at 20% below the appraised value. All right, so you always want to aim to buy 20% below the appraised price. Got it? Great. This is quite an important point that I want to make sure you understand. So let's look at a scenario where you found a $100,000 property that can be easily rented out. With good negotiations from your part and with good reasons that this seller is quite desperate and motivated to close the deal, you have both agreed to close the sale at $80,000, okay? So you got a $20,000 discount. You go to the bank and you ask for a mortgage loan. The bank will send an appraiser to evaluate the property, and the results come back and say, oh, this property is worth $100,000 or very close to it. Responsible banks will only lend you 80% of its value. So with 80% loan to value, LTV, the bank will happily lend you $80,000. As a conclusion, you have bought this property with zero or little money down, okay? Your cost will be limited to maybe agents' closing fees, notary fees, if anything, other closing costs. Now, isn't that amazing? From there, you will rent out the property and generate unearned income for yourself after paying all expenses, money coming to you every month. Now, I always make sure my properties are well maintained and that either I am looking after them or that someone else is looking after them. All right, a mixture of good location, a well-kept property, positive cash flow will bring the property price even higher, and it will become easy for you to sell it with a proven track record of performance, okay? And it puts you in control in improving the future value of the property. Now, what I'm trying to say here is that you do have control over the purchase price, okay? Over the rent, over the expenses, over the future selling price, how much you will sell it for later. You have control. In stocks, you have no control. You just have to pray. Just keep praying. Next angle I want to look at is liquidation of profits. Now let's imagine a scenario where you bought $100,000 worth of dividend-paying stocks and $100,000 worth rental property, both with 90% margin. For the sake of comparing, let's assume that after some time, both investments have doubled in value. Now this means that the current value of both investments is currently $200,000 each. With a 90% on your initial investment, you would have invested only $10,000 from your own cash to purchase each of this $100,000 stock and $100,000 rental property. Now this means that this $100,000 capital gains for each investment will result in a 100% handsome return on your invested capital. You got 100%. Now those profits are called paper profits until you actually sell these assets. So the main question you'll be asking yourself is, which asset is faster to liquidate to enjoy the profits? It's going to be a no-brainer to say definitely selling stocks is way easier and faster. In fact, with a click of a button or with a simple phone call asking your broker to sell your stock will be sold instantly at market price. Now you will think that this paper asset is definitely a winner when it comes to the ease of liquidations of profits. And I would totally agree with you. In the case of paper assets, you can also have the choice of selling the entire portfolio or a portion of it. All right, so that's also nice. After paying capital gains taxes, which depends on the country you're in, you will still walk away with some good chunk of profits after paying capital gains tax. But you will lose any future dividends from the stock, which is counterproductive, all right, to reaching financial freedom. Say you bought $100,000 worth of shares and 5 years from now, it's $150,000. If you want to cash in on the profits, you would have to sell it. You would have to give up those shares, the very same shares you believed in. Remember, to become financially free, you have to increase your unearned income to a level that is at least 20 to 30% above your current expenses, both your wants and your needs, okay? So by selling this appreciated stocks, you would have gained money now, right? But lost all of the future unearned income in the form of dividends, if your stocks were paying any dividends. Now you might be wondering right now how rental properties are different. The short answer is you don't need to sell your rental property to enjoy tax-free profits and monthly cash flow. All right?
I don't believe you. Continue.
In case you thought you heard me wrong, I will say it again. You don't need to sell your property to enjoy both tax-free profits and monthly cash flows. Let's look into this. You might be wondering how. It's as simple as approaching the bank, asking for a new appraisal once you've renovated the property or just after some time, and asking for a new mortgage on the new appraised value. Okay, now the mortgage will pay off the previous mortgage, and the beauty of all of this is that the investor will cash in the profit without any burden of capital gains tax. At the end of the day, the profit will be liquidated in the form of a mortgage, not in the form of capital gain. Add a sweet cherry on top of the pie, there is also a long-term benefit. You as the investor can still enjoy rental income, which goes against the conventional wisdom, you cannot have your cake and eat it too. Well, in real estate, yes you can. Real estate in the form of rental properties has the magic that allows you to have your cake, keep it, and eat it too, right? And keep on eating it for a lifetime. A wise investor who wants to achieve financial freedom can use this $100,000 and purchase with it 5 and even 10 properties, each worth $100,000. with the use of leverage at 80%, putting only 20% down, and even 90%. That's right, you can put $10,000 in a $100,000 property. In that way, the wealth building process will be accelerated at rates not even imagined by the investor before embarking on the journey of building wealth and achieving financial freedom. This cycle, guys, this cycle can be carried out on and on. With each appreciation of the price of the properties, you can cash your equity out from the property and reuse it over and over again without having to give up your property, without having to sell your assets. So we've gone over why I believe rental properties are the best choice for building wealth. And this is why you should favor real estate more than stocks for building wealth. Okay, you don't get capital gains tax on it like you get for stocks. You get constant income from it as well. And you don't have to give it up. The wealthiest people throughout history has made their fortunes through real estate or businesses, but most preserve their wealth through real estate. Rental properties generate wealth, but it's not a get-rich-quick scheme. It's a get-rich-for-sure scheme. I have a mentorship program where me and my team will work very closely with you on your investment goals. We help you draft a 15-year plan, and we knock down all the obstacles that are in your way of achieving them, so you have no excuse and no reason for not starting real estate, because there's always a way to start no matter which position you're in. It's a close one-on-one mentorship call with a 7-hour course where it feels like literally we're walking around my house going deep on some real estate secrets, tips, strategies, tricks, scripts, even what to say and how to say it and when to make it count. Literally 5 years of real estate knowledge from my family are condensed into this 7-hour course. Straightforward, easy to watch, no bullshit. And if you're interested, click on the link in the description below to schedule a call with me or one of my teammates. We'd have to qualify you to make sure you're able to take this program, because we like to work with people who are serious only, those who want to get results, those who are ambitious. This is not for get-rich-quick people. If that's you, don't even bother contacting us. It's Sanan Sanani. I hope today's video was valuable to you. Hit a subscribe button if you're new to my channel, and comment below how old you are and where you're watching from. And if you have any questions with real estate and how you can get started, comment down below your question. I reply to all my comments the same day. Also, if you enjoyed, you can help me pass on this video, pass on this message by sharing this video on social media. This channel, guys, has been growing, and I'm so excited about putting out new content thanks to you. So if there's a question you want answered in real estate investing, shoot, and I'll answer it personally for you. Till next time.